Hey everybody, this is Ray Halstead and your CFO, Andrew McMillan. Today we want to talk about cash flow. We hear from a lot of small business owners that will, especially during tax time when we tell them how much profit they had from their business, one of the common themes is, well, I didn't get that much money, or it doesn't seem like I have that much money. How do I have that much profit? So there's always somewhat of a disconnect there between understanding profit and cash flow. I got Andrew McMillan here with me today. Andrew, kind of help us out understand why, profit might not always equal cash flow.
Yeah, for sure. It can kind of be a hard thing to kind of wrap your head around because you really got to balance two different things together. You got your profit and loss statement that a lot of business owners are aware of and can understand. It's pretty straightforward. But you also have your balance sheet that you've got to start understanding on some level to really be able to marry the two together and understand how to better see what your cash flow is and how it compares to your profit. So profit, which is going to be on your profit and loss statement, shows your net income, your net profit. That really doesn't always translate to cash flow. And one of the, a good example would be, let's say that you generated a big sale in April. So you had a big sale in April, but you don't actually get paid for that. The customer didn't pay you until June. So in April's books, you look really good. You had that big sale. So you've got all this profit, but you don't have the cash yet because you didn't receive it until June. So there's a cash flow issue there. So that's one of the things that we really like for business owners, or at least try to get a good grasp around of like, what's the things that are making their profit not necessarily translate to the cash in their bank. And some culprits, about 5 things that we've really identified that are just the biggest ones that business owners struggle with. The first one would be accounts receivable, AR. You can be very profitable. You can be generating a lot of invoiced revenue, but if you're not collecting on that AR, it's never getting into your bank account. So make sure that you're managing your accounts receivable. Make sure that you're invoicing early and then you're starting to collect quickly. You got to stay on top of your accounts receivable so that profit really turns into cash. Another one would be inventory. Some businesses that have to heavily invest in inventory, they are spending cash. They're spending money on inventory. And inventory goes on the balance sheet. Inventory doesn't go to the profit and loss statement until it's actually sold through cost of goods sold. So you could be selling inventory, making profit, but you still could have spent a lot of money on inventory that's still sitting on your balance sheet. So that can kind of skew the numbers there. And thirdly, loan payments. If you've got a lot of debt on your books, or even just some level of debt on your books, which a lot of business owners do, the principal payments that you make on that debt every month, the principal payment does not reduce your profit and loss statement. It's not an expense for the business. So that principal payment is taking cash out of your bank account, but it's not generating like an expense for your business. So you still got that profit there. So there's a difference there. Another one would be owner draws. Like if a lot of small business owners are shareholder or S corporations. So you as a shareholder in that S corporation, you're able to take draws from the business to, supplement your personal lifestyle and other income. But those draws are not a deduction for the business. Those are not an expense for the business. So if you're still generating profit, but then if you're sucking cash from the bank account through shareholder draws or shareholder distributions, then that can be another thing that skews the numbers there, that throws off your cash flow and makes your cash flow not really jive with your profit and loss statement. So those are all just a number of things that we know can make it hard for business owners to navigate around and really understand, why do I have this profit, but I don't see it in my bank account? Those are the things that really kind of drive some of those issues. So those are things that we like to work with on business owners to help them understand and navigate through.
Yeah. So if you're a small business owner and you're having a hard time reconciling the fact that you're profitable, but you don't have any cash, and you want to understand that a little bit better, feel free to give us a call and we'll help you out. Thanks.